All right. So we've had a very interesting last 30 days. Now, we're going to show you guys a bunch of stats because we actually haven't showed you the stats, and anything we compare to is going to be to December 14th.
Yeah.
It's important to keep in mind with this that the seasonal trends about what has happened is there wasn't many people selling between Christmas and New Year's.
Anyways.
Yeah, exactly. So so everything that we're talking about here is going to be based off of the last rolling 30 days. So we pulled the stats on Friday. So it's January 8th to December 8th. So that's the time span we're talking about.
Yep.
So lots of numbers have changed. But we're going to be looking for this to settle out over the next, even the next meeting, and then after that, so over the next 30 days, once we get over Christmas, the numbers are going to start to improve. But I'm going to tell you, the market, the absorption rate numbers are quite a bit higher than they normally would, and we're going to attribute that to a lot of, we're going to attribute that to obviously the seasonality of it. But a quick comment on it, CIR's transactions in the first couple weeks, in the first week, I guess, that we pulled last week, are
good.
Yeah, like
really
almost
good. Our first 7 days were epic, actually.
Yeah, we're way ahead of where we thought we'd be.
Yeah.
So we're actually just above 2013 numbers and 2013 ended up being a fantastic year.
Yeah.
So I'm not saying it's going to be an incredible year or anything else. I'm just saying that.
But when the numbers are good, the numbers are good,
yeah,
and
starting
you
in January,
talk about it.
we're doing fine as a brokerage.
Totally.
Yeah. So
awesome.
okay. So let's go into it, Kirsten. Let's talk about oil.
Yeah, I feel like this trend is getting sad to talk about every single week. But the price of oil has gone down. By the end of this year, we could do a video montage because I'm always the one that does the price of oil and all the different ways that I say the price of oil has gone down. Negative, but we're at $32.91 currently versus $35.35 last month. Our Canadian dollar is also down. We're at 70 cents. We're at 70 cents now to the U.S. dollar versus 72.78 cents last month. There are a lot of factors that are making oil, increasingly going down, but
which we'll talk about.
We'll talk about that in a few minutes.
Yeah. Okay. In terms of the number of listings on the marketplace, due to seasonality again, the number of listings in Metro Calgary actually dropped by 732. Some properties came off the market. Obviously, that's a combination of sales and expireds. Yeah. We also have Red Deer, which is actually increased a little bit from 496 to 546.
Wonderful. Months of inventory, our absorption rate. Currently, for Calgary and area, we're at a total of 6.73. So we have jumped up significantly to a buyer's market since our last meeting. Single-family homes is 5.60, which is balanced, but on the higher side of balanced. And at condos, we're at 8.03. So we're definitely in a buyer's market for that.
Yeah, we're in the buyer's market for the single-family homes too. 2 to 4 months of inventory be balanced. So, but it's
but
obviously.
Some people say 5.
Yeah, and some people in the U.S. they say 6 for a lot of different marketplaces. We've always said 4.
Yeah,
exactly. In terms of surrounding areas, Okotoks, 8.5 months of inventory. Airdrie is 5.8 months of inventory. Cochrane is 8.36. Red Deer is a 9.41. And I want to speak to Strathmore for a second here because Strathmore had a bit of an increase from 4.59 months of inventory to 15.67 months of inventory. What happened was in the last 30 days, the rolling 30, there were only 6 transactions that happened in Strathmore, and that's compared to an average typical around between 20 and 25 transactions. So they had 6 over the kind of the Christmas holidays. So we expect Strathmore to change dramatically.
Absolutely.
Moving in here. So take that with a huge grain of salt, you guys. But we're going to share the numbers as they are.
Yes, but that was a good talking the people off a ledge before.
Yeah, the Strathmorites. Strathmorians. What do you guys call them? What do we call Strathmore?
I don't think we call them anything.
People from Strathmore.
The people from Strathmore.
Got it.
The farmers in Strathmore.
Russ said farmers from off the camera. All right.
Benchmark price, $448,800 versus $450,700. So down 0.42% monthly and down 2.33% year over year.
Yeah, year over year, we're down 2.33%. So that's okay.
That is okay.
And that's because in the $500,000 price range, 450 to 550, stuff is still moving. Obviously, the higher price ranges are getting hit quite a bit right now.
Yeah.
So really quick, a shout out to Steve Phillips here. Steve ran a bunch of numbers. He did some quick analysis on it regarding what does long-term investing look like in real estate. We don't have the stats for you here. He sent me an Excel spreadsheet, but I want to share some of the investments. And he looked at, or some of the numbers, he looked at if you were to buy a house in the year 2000 and hold on to it for 15 years, what would happen? And obviously, you know, we had a good time span throughout then, but you would get on average a 7.7% appreciation gain if you have per year on average if you had bought in the year 2000. That's for single family homes. For condos, it's 4.59. If you were to remove 2005, 2006, and 2007 in those averages, then it's 3% appreciation and 2%. Now, but I want you to remember why real estate is such a great investment, and it's because of leverage. When you buy a house, you don't need to put down 100%. You only need to put down 25%. I tell people and investors, never buy assuming you're going to get appreciation. It doesn't make any sense. You want to buy because you're going to get equity pay down and cash flow. So if you bought an investment property and you got let's just say 7% appreciation, and you only put down 25%, now you're talking about a 4-to-1 ratio, so you can actually say that your actual return is closer to 28%, less some repairs, maybe 25% per year, and that is why real estate is such a great investment. Secured against something tangible. Buy real estate, you know, buy land, they're not making any more of it, you know, as Mark Twain says. So I just want to give you guys those numbers because I think that it was an interesting analysis that the pitch to the client is always over the long term. And when should you buy? When prices are low.
Yeah.
And we haven't seen a better time to buy than we have since 2009.
Absolutely.
And that is just, you will look back at this, and your clients will look back at this as a missed opportunity if they're not capitalizing the market today.
Very cool.
In the news, Kirsten,
Good job.
Royal Bank.
In the news, yeah, Royal Bank has hiked, not all, but one of its mortgage rates, 2.94 to 3.04 over the 5-year fixed mortgage, 1/10 of a point to 3.04%. We haven't seen any other banks that I know of do that yet.
Yeah, it might follow suit. They might follow suit, but interesting that the bank decided to do it, and that is just their special offer rate. That's not going to change the posted rates.
Yes. So we'll see what happens, but it's interesting when only one does it to just one.
Yeah.
Yeah, typically we see a little bit over a 5-6 day period, the bank's kind of compounding that, but they must know something. We'll see.
Yeah, as far as the oil prices, nothing has changed really in terms of OPEC or anything else. There was even some turmoil in the Middle East with tension between Iran and Saudi Arabia.
Yes.
So that tension like that normally drives oil prices up because of volatility. People expect that the supply might not be there anymore. It might disrupt supply. However, China has had some huge turmoil in the stock markets. The government is trying to put rules in. They had to close down the stock market sometimes. So China saw a huge plummeting in their stock market. China represents 1 billion plus people.
Yeah.
I don't know what it is. It's 1.6 billion, or there's a lot of people in China. And a lot of people who are going through a financial turmoil indicates the demand for oil might not be there. There's not going to be a lot of people investing. So that means that if global demand for 1.6 billion people is down, they're not going to manufacture as many goods, they're not going to need as much oil. Therefore, the demand for oil softens, which makes the supply glut even more of a problem.
But that crash is supposed to be temporary. Like, I don't think that we're going to see that to be long term. Like, even the way that it happened and the duration has already been very short. So I think there's going to be some recovery on the China front.
And that's the point, is that half of the people in China didn't just go away. They're still there, but we see the market react to the oil, and that's where we saw a huge drop in the price of oil from that $37 mark down to that $32 mark. I think it's sitting around 33 today. So, so that's that. Enough about that. That's what's going on. The economics, you guys are up to date for the year.
Wonderful.
Yeah.